What's up guys, welcome back to Mark's Stock Review. Hope you're having a good trading week so far. This is going to be an updated video on Microvision. I'm going to talk about why there's been a recent downtrend in the share price, whether it's still a takeover target from my point of view, and a final take. I'm going to keep this video very brief and informative to respect your time without fillers, so a thumbs up and subscribing if you haven't already would be greatly appreciated. So that said, let's get right into it. And full disclosure, at the time of this recording, I do not have a position in Microvision. In my first video, I said that Microvision's share price could explode 2 to 3 times in Q2 2021 if everything stayed on track, but it turned out that it occurred much sooner than that. The share price has approximately tripled since my first video and even includes a pullback of around 17% in the last month. And so before I get into whether Microvision is a buy on this recent pullback and whether it's still a takeover target, I'm going to give you my take on why the share price has recently declined. Reason number one is the recent capital raise. No surprise they took advantage of the higher share prices. This one's straightforward. The reasons they gave were very non-specific: working capital and capital expenditures. Reason number two is that Microvision got caught up in the valuation-dependent tech sell-off due to the rising rates and fear of inflation. I did mention this in some of my recent videos, so I'm not going to go into detail. However, any questions, please let me know in the comment section below. So is Microvision still a takeover target? Well, in my first Microvision video late December, I did say the exact words, "No, not right now," on whether they were a takeover target. However, I did say they would be a strong takeover target in Q2 2021 if their new patent and their April demonstration was successful. I listed below some of the factors that do affect the attractiveness of a company being bought out like Microvision. Note that I only checked off 2 and said that a successful Q1 would take care of the rest. So now I'm going to follow up on those factors that do affect the last 3. First, an update on their technology. Per their CEO, they do expect their first generation long-range LiDAR sensor to have a range of at least 250 meters and the highest resolution at range of any LiDAR. It's going to be designed for level 3 and level 4 autonomous driving features. Number 2, their sensors are expected to meet or exceed the OEM requirements for autonomous safety and autonomous driving features per their CEO. And number 3, their sensors have been scaled over the last decade and scaled on a silicon wafer and laser diode technologies, which should allow them to cost less than $1,000, which the CEO believes is a key price point for commercial use. Moving on to action items for commercialization, they do have received the necessary components and equipment to meet the April milestone of completing the A samples of their long-range LiDAR sensor. And number 2, they have started outdoor testing of key performance features on its development platform. And number 3, they plan to establish a pilot line with appropriate capacity to demonstrate scalability as they have done over the last decade for multinational technology partners. And lastly, potential sales. Per their CEO, a version of their first generation long-range sensor could be available for sales in small quantities Q3 or Q4 of 2021, with expectations it's going to be best in class. And so for my final take, a few key points. Number 1, Microvision is still pre-demonstration and mostly pre-sales, so you're going to have to trust in what the CEO is saying if you're going to remain bullish. So far, the share price is still up since the earnings report, so far the investors like what they see. And number 2, it's going to be very important for Microvision to have sales, even if in small quantities, of their new LiDAR system before end Q4 2021, because competition's really going to heat up in 2022. And number 3, a reminder that many valuation-dependent small companies without significant revenue are recently down. Not a reason to buy or sell, but it's something to note. And my next point is that Microvision is more of a swing trade than a long-term hold, and there's nothing wrong with that at all. And so I do believe Microvision is still a takeover target. I do think they're making reasonable progress towards that goal. However, I do believe investors got ahead of themselves a little bit. And so because of that and the 2 other reasons I gave previously is why the share price has been declining recently from my point of view. And that does it for my video on Microvision. Definitely reasons to stay bullish. I hope you guys found it helpful. If you did, please consider subscribing and hitting the thumbs up. I greatly appreciate it. Have a great rest of your day, and I'll be talking to you soon. Take care.